Welcome back to Explain the Charts. Today, April 16th, 2025, we're analyzing EURUSD, focusing on both the latest news and in-depth chart analysis. We'll combine fundamental and technical perspectives to inform your trading decisions. Recent news indicates that the euro to US dollar pair remains stable above 1.1300, but some sources predict a tough year for the euro. Let's see if our charts agree. We see headlines about EURUSD bullish momentum building, but need to see what levels might reinforce such a move. Looking at the one-day chart, we can see a choppy price action over the past several months. If we focus on the candles starting around January 2025, we see an overall downtrend, bottoming out around 1.01. Now let's zoom in on the more recent data from March 2025 onward. We see a sharp rise in early April 2025, followed by a period of consolidation and recent pullback. This suggests some bullish momentum, but with potential for a reversal. Now, let's examine the one-hour chart to get a clearer picture of the short-term trends. We can see how the price action has been moving within a defined range. Zooming in, we identify potential support around 1.133 and resistance near 1.138 on the hourly timeframe. A break above 1.138 could signal further upside, aligning with the higher highs likely news. However, a drop below 1.133 would suggest a bearish reversal, which might be correlated with the ECB not being aggressive enough. For finer granularity, let's look at the 15-minute chart. We can see that the price is currently hovering around 1.133 and has been struggling to go much higher than that. The 15-minute chart shows a very slight downtrend. Overall, the EURUSD chart analysis shows some short-term bullish signals, but also clear resistance levels that need to be breached for sustained upside. The long-term picture is more bearish, given the macroeconomic conditions. Key price levels to watch are 1.138 resistance and 1.133 support in the short term, and 1.01 as a lower bound if bearish sentiment becomes overwhelming. A Republican victory could be a market positive sign, and we'd be looking at 1.14 as a target if such an event were to occur. The most likely scenario is continued choppy trading within the defined range, but that could change if events regarding US-China trade or ECB policy arise.